Good afternoon, Oak Bloke again, and going to look at now. This isn't a pick for 2026, largely because I've already decided what my 26th one is. I've just done the recording of the 25th idea, and this maybe it could be an honorary 27th idea. I don't know, but anyway, it kind of isn't a pick for 2026, but it's something I've bought today. None of this is advice. This, you make your own investment decisions. But I've been working through the numbers, and I was doing various screens on um, stocks that have been knocked down, that are on a high yield, but have substantial assets. So this one is Bluefields. So Bluefields Solar. So uh, Bluefields Solar Income Fund, and what I'm going to cover with you is why I bought them. What do I think we this could this could generate, and so on. So basically, if you went and bought the whole thing, it would cost you 400 million. If you bought it, you'd get assets that net asset value is 690 at its last accounts. There has been a Q3 trading update, which gave us a slightly lower number of 675, which was at the end of September. This company pays a dividend of 9p a year, so 9p a year on 60. Well, I actually paid 68.6p, so that's physically what I've paid today. So 9p on 68p is 13. Technically, I think it's 13.1%. I guess the question would be, well, is this something where you're buying? As you can see here, something that's going down and down and down in value, so dropped from 690 to 675, or are you picking something up at a bargain price? Is this 400 getting something certainly worth more than 400? Let's put it that way. So that's the question. Well, what you're buying is a whole load of assets. You can sort of see, like, with these little squares and triangles and different colors, that you're basically buying a whole load of solar assets, solar photovoltaics. Most of them, or many of them, have got battery storage attached to them. So you're not just sort of earning money whilst the sun shines, you're earning it in the evening when everyone puts the telly on, and the price of electricity shoots up because there's surges. So that's kind of what they've done from the get-go, is have battery energy backed solar assets, but there's also some wind assets as well. So the wind single turbine wind farms, you can sort of see there's these little sort of throughout northern England and southern Scotland, and a couple in sort of dotted around everywhere, basically. Anyway, kind of where all the assets are is kind of pretty irrelevant as far as I'm concerned. It's just that they're all over the UK. And of course, you are therefore exposed to single country risk. I suppose that is true. That 675 million, or at the end of June, the 690 million is made up of an asset portfolio of 971 million, plus a joint venture worth 123. So those are the number of megawatts that you of worth of generating capacity that you've got. You get a development pipeline of worth 36 million. You've got current assets, so see, like receivables and working capital, whatever, of 140. You've got debt. Now there's two lots of debt. There's the sort of long-term amortizing debt of 446 million at the end of June, plus the RCF at the end, again, the end of June, of 135 million. So that's how you get to your 690 or 675 at the end of September. This 883 equates to, for every megawatt worth of generation capability, you're paying 1.1 million pounds. Now, you're paying 1.1 million pounds for the solar slash wind, and then you get the BESS thrown in for free. It's a bit of a strange setup where the BESS doesn't have its own valuation as far as I can tell. Obviously, I'm working with the disclosures in their annual report and their presentation and their what's this, the fair value assessment. So yeah, they kind of don't really um, draw out the separate, this is how much the solar's worth, this is how much the wind is worth, this is how much the BESS battery energy storage is worth. They kind of lump it all in together, which, okay, fair enough, whatever. So what you see is that the on average per megawatt there's a valuation of 1.1 million pounds, and then the joint venture has a slightly higher valuation of 1.37 million pounds per megawatt. They're pretty much the same assets, so obviously you've got to kind of say, okay, so that one's worth what, 270,000 more than that one for what reason? Oh, there is no reason. Okay, more on that later anyway. Uh, what I want to sort of look at is a couple of different things. As I say, I mean, the 13% dividend yields, that's 3.25% per quarter. They've been paying that for years. It's been going up. It wasn't 13.1% way back when. It was a lot less because, of course, the share price has dropped and so on. So you're buying this, this is bargain bucket territory where the price of it has dropped and dropped and dropped. I think you would have lost about 50% of your money if you'd bought this about 18 months, 2 years ago. So there's plenty of harumphers out there that will be unhappy with this company and say it's a load of rubbish and blah da da. I mean, like, I can only take it based upon what it's worth today at the 29th of December 2025 when I'm recording this and when I've made my own investment decision. It's up to you to make your own investment decision, but this is how and why I made mine. So you're buying solar energy assets with attached storage, you're buying wind assets, probably with attached storage. Again, not clear. Um, Now, this is the other part to the valuation thesis. This isn't a fund where they're struggling on or going to struggle on. They have struggled on for years. I'm buying this at the point where they've announced, and the share price hasn't gone up at all on the news, which you kind of look at and go, well, okay, like, why would the news not be a positive? But let's kind of consider this. They have said, put simply, we discovered that the whole Bluefield enterprise is worth more than the sum of its parts. Now, that's another way of saying this company is worth more than its net asset value. Okay, that's what that sentence means. Um, if that's true, obviously they've got to make it happen. But if that's true, then it's worth more than its NAV. And then why is it worth more than its NAV? Well, because it's got a development pipeline, because it's an ongoing business that's growing. It's a growing business. When you look at the last 10 years, 15 years, I mean, they've grown it from sort of small beginnings to big, 900 megawatts worth of power generation. They've increased. So they're clever and capable of doing those things, and not everyone can. They've got the in-house capability of uh, getting the planning permission, getting the contractors, getting the securing the connections, all of that stuff. Like, you don't just snap your fingers and start up a solar generation business or a energy generation business. It takes capability and skill. So what they're saying is that they've got that. They are a going concern, and somebody that has the money, that has the capital, they can pick up a going concern business at a fraction of the price. So that's the attraction. Now, what I would sort of compare this against is a company that I wrote about last year, which is Harmony. Harmony was battery energy storage, not solar generation. They didn't have any generating. They would buy, basically, they would buy the electricity when it was cheap. They'd have sort of energy storage, battery farms, and then they'd sell it when it was expensive. So they'd buy it from a solar generator in the day and sell it in the evening when everyone's making a cup of tea at night at premium times of the day. So they sort of skin off a profit on that, but then they'd also do other things like demand management. So it's all of the capacity management of battery energy. So anyway, Harmony eventually sold for £500,000 per megawatt, and that was just BESS. No generation capability, just BESS. This is BESS plus solar generation capability. Currently, it's valued at 1.1 million per generating megawatt. So it's not the same as Harmony, but it is the same in the sense that it has a lot of the same sorts of characteristics. And in the same way that Harmony, you could have bought Harmony. I think I bought it at something like 45p, and it eventually sold for 82p. I think it was that it eventually went for. So there was quite a big upside to what you could pick it up for to what it sold for. Now, what my hope is, and I don't know this to be the case, all I'm working from is, we've discovered that the whole Bluefield enterprise is worth more than the sum of its parts. Potential investor interest was greatest when considering the company's operating assets in combination with its sizable development pipeline. Now, I do know that development pipelines are valuable because getting a connection is flipping hard. You can wait like a decade to get a connection to the grid. So you can't, as I say, you can't just rock up and just expect to become an energy developer. No, 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 no. You get in the queue behind everyone else. And